It has really been this AI optimism fueling the stock market's meteoric rise. Are you seeing signs of danger?
Well, I think what Jim is saying, like if you're getting too much debt issuance to finance the spending and the revenues are not meeting the expectations, I think that's where the collision could be in the markets. And so to his point, like you're getting a narrow group of winners within the AI trade that maybe be meeting the expectations, but several others cannot. And I think this is the tension is building. So we have a nice relief rally from the reopening, from the government. That's great, but I think it's back to reality. So he's right.
You heard Steve Sedgwick bring up this question of the logic of the markets that we're rallying in spite of the shutdown, continue to rally when it looks like we might get a reopening here. And then the question about whether the data, once we get it, is going to support this optimism.
Yeah, and I think yesterday's ADP data was just one first sign of like, well, wait a minute, the job creation is actually negative. The Challenger report the week before was negative. So this next payroll report, which was delayed from September, may not be a great report. And although that's past data, I do think markets will react with sensitivity because it does underscore that the economy underneath is not doing that great.
What kind of moves are you making right now when you're looking at, it looks like some angst over another rate cut in December, this reopening trade and the data that goes along with it? We're watching this meteoric rise in gold continuing to go higher, even though the stock market is apparently rallying and we've got a risk-on sentiment. Yay, gold.
Yeah, I think that's a relief there too. You know, gold actually had a quite big of a sell-off suddenly. I guess really because it was overextended. So maybe that's what explains the technicality. But the way I would look at the market today, Contessa, is that you continue to have this group that's driving it, the AI group, so to speak. So you do got to think of somehow diversifying. And as you showed in the inline, the starting segments, like there's a bottom there of healthcare names and other defensive industrial names that I think are attractive. That's what yesterday's session showed too. You can have some rotation opportunities here at times where tech can kind of trade off against better performance in industrials. That's what I would do.
One thing though, we're looking at, sometimes you might look at investment and utilities when we're looking at some cyclical investments. Utilities right now is part of an AI trade.
Yeah.
How do you balance that?
Yeah, that's a tough one because, you know, all this power demand is giving these companies tremendous amount of firepower in terms of like earnings and so forth. So the utilities are also AI stocks, unfortunately. So you got to think of other ones, right? I mean, maybe related type of industrial stocks that you got to diversify in. So be mindful of the utility stocks.
Okay, and for the rest of this week, when we're looking at the markets and the reopening trade, what are you looking for specifically to move the markets?
Well, we're going to get the first data release out probably within the next few days. That will be a big focus. Say the payroll report from September. I think that's what people should watch.